This is Jay Martin.
So let's jump right in. I want to do a quick round of rapid introductions. It's remarkable how many people at this conference are here for the first time. Could you show me a set of hands again? Wow. Okay, so thanks so much for being here. Fabi, let's start with you. What I would like to know is who are you and what do you do?
My name is Fabi Lara, and I'm a private investor like most of you guys. I also help some companies to get some exposure when I think that they have something going on that's interesting and that most people may not understand yet. Then I like to bring them onto my YouTube channel, on my Twitter channel, etc. And so I help them out that way marketing-wise. And I've been investing in uranium since 2014, which was way too early, but has worked out well so far.
All right, thank you, Fabi. Daniel.
Daniel Major, CEO of GoviX Uranium. I run a uranium development company. We've got 3 projects in Africa. First one of those is in Niger. We finished its feasibility study. We're currently raising the debt to finance it, get it built. Hopefully that will complete this year. We'll look to produce uranium from end of 2025, 26. And then we've got a second project down in Matanga in Zambia. That one's finishing its feasibility study this time next year. Go into the same cycle. By 2027, we'll have 2 mines running in Africa. So that's what we're doing.
Love it, Daniel. Thank you. Nick.
My name is Nick Hodge. I own a website called Resource Stock Digest that helps junior mining companies tell their story. I own that with a partner named Gerardo Del Real, and together we also co-own a publishing company that has newsletters that cover the entire gamut of the market, including some focus to junior resource stocks and some exclusively for private placements for accredited investors.
Rick.
Rick Rule, longtime friend of the Vancouver Resource Investment Conference. Went to the University of British Columbia here beginning in 1970. Got interested in uranium in 1973. And I guess I would describe my relationship with the uranium industry after the 2000 bull market as a uranium beneficiary.
All right, I love that. Now, it seems like sentiment has shifted dramatically in the last year. Look, like I said, every year we do uranium features. Every year our audience is bullish on the uranium sector, and we can point to a handful of demand drivers that make a ton of sense, but not a lot has happened in the uranium space until recently. And now suddenly there's a new buzz of energy and maybe some actual real-time catalysts that are gonna drive change. Would you agree with that? Are there events occurring in the world today that make this year's sentiment more validated than we've seen in the previous decade? And Rick, I'll start with you and work back this way.
I think the principal factor is the change of public opinion in Japan with regards to the pace of Japanese restarts. The biggest source of new demand that you could have on the planet is from 40 existing reactors. They don't have to be built, they just have to be restarted. And Japanese restarts do 2 things. They raise the structural demand for uranium by between 10 and 12 million pounds a year, at the same time that they take a bunch of the supply overhang in the market out of the market. I know at Sprott, when we were buying uranium hand over fist for Sprott physical uranium, for some reason the dealer that kept hitting us was Itochu, which leads me to believe that that was all Japanese supply that we were buying. And we bought 55 million pounds. So I suspect that we did a pretty good job cleaning up the overhang.
Nick, how about yourself? Same question.
Yeah, I think the catalysts have changed and the need for nuclear energy has evolved and is now being accepted more broadly. I mean, they screened a movie last week in Davos at the World Economic Forum. There was an Oliver Stone movie that was called Nuclear Now, I believe is the title of the movie. So, you know, the powers that be are...
Be careful who your friends are, Jesus.
Hey, we'll take anybody if it helps us.
Well, this is what I'm saying. It's coming from the top down now. The narrative is shifting on uranium and nuclear stocks. We see that in California as well. It's Democratic leadership, and they've extended the Diablo Canyon reactors, for example, or the amount of money that was given to the sector by the Inflation Reduction Act to secure light-enriched uranium, for example. So I think there's a sea change in sentiment extending the runtime of the existing reactors. But there's other stuff going on as well. I mean, we're seeing the first small modular reactors approved for the first time. They're going to create a new center of demand. We've seen a switch from underfeeding to overfeeding, and of course the ongoing Russia situation, which may or may not get sanctioned, which would be another catalyst. And then On the demand side, you've seen this secondary demand, which Rick alluded to, the Sprott funds coming in and buying, the yellow cakes of the world coming in and buying, UEC buying physical pounds, or Uranium Royalty Company or whatever it is. So the narrative has shifted, the catalysts have shifted, and as a result, I think that the fundamentals have started to shift as well.
Okay, thank you, Nick. Daniel.
Yeah, and I think you put all that together. At the end of the day, we consume about 190 million pounds a year. Currently, we dig out of the ground about 130 million pounds. That gap has been filled by the inventory in the past and the secondary side. And the inventory, not only from Sprott taking out 55 million pounds of it, utilities have been pulling down. I mean, they were looking at cheap gas they were competing against. They were drawing down inventory. We've seen US inventories go down from about 3.5 years down to 2 years. Secondary market as well, and recycle. The Russian-Ukraine issue has pulled a lot of that secondary material away from the market as well. You're seeing the overfeeding coming through. So the thing that was filling the market is now disappearing as well. And you're coming back to a fundamental position, which is we don't dig enough of it out of the ground to go forward. Most of the US utilities have a big void in their book from 24 onwards that needs to be filled.
Right. Okay, thank you, Daniel. Fabi.
What really gets my attention from the last 12 months or so is not only that people like me and who really writes the checks, i.e. governments, really care about nuclear now, that they're finding out that other forms of clean energy may not be so clean, and that we actually just need more energy and we need to diversify our energy sources, but also the fact that if you go down the nuclear fuel cycle, you don't just have uranium and put it into a reactor. It doesn't work like that. You have to turn it into UF6, and then from UF6, you have to enrich the uranium. So there are many, many steps, and everything about it is very slow. And when you contract your uranium out, you're not going to deliver that for quite a long time, and that's not going to be used in the plant for quite a few years. But the thing that I find interesting is that those two other types of material have actually increased in price quite a bit in the last 12 months. I think they've doubled or tripled. So that's a sign that the market is really tight. And the next thing to happen, in my opinion, is that utilities are going to have to buy more and more of the yellow cake, which is the stuff that miners produce, in order to fill that demand that they've been sitting on quite relaxedly. Because they were sitting on inventory, and I don't think that inventory is as abundant anymore.
Okay, I appreciate that. And so there's a handful of plants that are having their lives extended. Japan's looking at restarting 40. That's a big catalyst because it's not talking about extending the life of an existing plant, but actually restarting 40. There's also a lot of conversation about SMR development in the United States, and I think China has plans for about 150 new plants in the next 15 years. That's pretty crazy numbers. But what I want to ask based off of that increased demand is how long is that bet? How long is that demand going to take to come to the market? Anybody want to take this question?
Look at China. You're going from 58 gigawatts now. By the end of the decade, they're at 70 gigawatts. You go out the next decade, you're 140 gigawatts. So that gives you the rate that China can put out reactors. SMRs are in no one's forecast at the moment. The only forecast I've seen out is Urenco, who put out a forecast of 20 million pounds a year within the next 7 years. Now, that's 10% increase on what we currently consume. So, and they're moving fast. I mean, governments could move a lot faster on SMRs. I mean, they're getting way too slow. There's money being thrown at it, but they're being more aggressive. You have had the first one, NuScale, now been approved to be constructed. British government is pushing forward on Rolls-Royce, but they've got to go faster. SMRs are very much going to become part of the play going forward.
I have to ask why, and I don't know the answer, why are they not factored into demand today, SMR development?
Well, quite simply, because none of them have actually been approved to be built yet, and we don't have timings for them. Rolls-Royce are looking to build their first ones by 2030, but we're a conservative industry. No one quite knows where to put them in, but you don't need them. I mean, at the moment, you're already sitting at, say, 190 with 30. We need to fill that supply gap. And on top of that, you look at Cigar Lake, end of the decade, it's due for closure. Cameco's trying to slow it down to keep it going for longer. Sure. But that's a 10 to 15 million pound production unit, which is another 9% of supply that when it goes has got to be filled. The mine near to us in Niger, Somaïr, that's another 5 million pounds a year. End of the decade, it's due to go closure as well. So you're coming to a point in the industry that we've got a supply gap now, and it's going to get bigger as older mines just come to the end of their lives, and we need new mines to come in and replace them.
And if you're looking at entering this sector now, how much should you factor in geopolitical risk into your decision making? When you talk about the demand coming out of China, any thoughts on where they're going to get that supply from? Rick?
At $75 a pound, there's a reasonable amount of uranium in the world.
Right.
At $60 a pound, there's a lot of existing mine supply that's economic, and there's some greenfield supply in Kazakhstan that's economic. At our uranium boot camp, shameless plug for that, China General Nuclear suggested that the incentive price for new plant construction before inflation was between $75 and $80 a pound. Their words, not mine. The Chinese government, whether or not they're talking their book, obviously has better access to information than I. So I'm assuming that number is correct. Certainly, there are a reasonable number of projects in the world that can supply extra pounds at a certain price. But I suspect, given what the Chinese said, that that price isn't 50 and it isn't 60. It's more like 70. If you take Kazatomprom and Cameco for what they've said they're going to do with their shut-in supply, that they won't restart it until the price that they can receive in term contracts is sufficient to earn their shareholders a reasonable rate of return on the supply that they add to production.
Daniel, what do you want to add there?
I mean, one thing that comes around in all the W&As, except diversification of supply, that actually applies to CNNC as well. The CNNC is currently the second largest uranium buyer in the world, behind Constellation. They'll be very soon the biggest buyer of uranium. Their current main supply is Kazatomprom, but they don't want to be significantly requiring one country to provide everything that they need. So that's why they have projects in Namibia. One of the advantages we have in Africa, we can sell to anybody in the world. You can't sell Canadian uranium to China. You cannot sell Australian uranium to China. So they have to go to other jurisdictions, and Africa is a great place for them to come, which is why you've got all the projects down in Namibia, which are Chinese-owned.
Right, okay. Nick?
Well, you're talking about geopolitical risk, and we see the picture now. You know, he laid out the sort of demand case and the supply case, and that's if nothing changes. But, you know, lots of things have changed in the past couple of years in the world, right? We still have, insecurity about the whole Russian situation. We don't know if any sanctions are going to be applied to them or not. They're responsible for a lot of the upgrading of uranium into the final end products, and we've seen really a scare across the Western world as far as security of supply, not just with uranium, but with other critical and base elements as well, and not just supply, but the processing. And so I'm a firm believer that jurisdiction matters, and you look at Canada kicking the Chinese companies out from their lithium holdings, for example, or in the U.S., the DOE starting to purchase uranium directly from the uranium companies, and those create sort of opportunities within the cycle, within the sector, with or without, what's going to change with the supply picture as far as geopolitical risk is concerned.
Okay, now super broad question that's just going to lead into my next question. 10-year time horizon. Bullish, bearish, where do you land? Right down the line, starting with you, Rick.
Oh boy, if you give me the luxury of 10 years, bullish. Yeah, very, very, very bullish. One thing that nobody here has mentioned is there's 1 billion people on Earth that have no access to electricity at all. There's 2 billion people on Earth who experience energy poverty, either intermittent energy or unaffordable energy. When we talk about energy in the West, we talk about stuff like Teslas. Increasing the living standards of the poorest of the poor worldwide, 40% of the world population, means that we're going to need more energy of all sources. Solar, sure. Wind, yeah. People hate me to say it. Coal, of course. But nuclear is a wonderful source of post-construction, cheap, reliable, non-carbon generating baseload power. Give me 10 years, that's a no-brainer.
Okay, I appreciate that. Nick, same question. 10-year time horizon, where do you stand?
Bullish for sure, and if you look at the charts that the analyst houses and research firms put out, the market might come back into equilibrium sometime in the middle of the decade, but then the supply deficit gets worse after that. So certainly bullish, especially as these global build-outs come out, not just from China, but countries in the Middle East and Eastern Europe, et cetera.
Daniel?
Absolute bull. And I think the one thing we forget here, we talk about energy, but we all think about electricity. Where nuclear is finding its place now is that 70% of the energy that's produced from a nuclear reactor just goes up the chimney and is completely ignored. So there's a massive push by the nuclear industry to take that 70% and apply it. Dow Chemicals, for example, has cut a deal with the SMR providers to build an SMR next to its chemical plant, that all of that power that comes out is now used. All that heat energy goes through. Hydrogen, the best way to get to $1 kilo hydrogen is nuclear. Why? Because you get all of that free energy coming off the back of it. It brings down the overall electricity costs you're going. Desalination is becoming a big issue. Nuclear is great at doing desalination. Centralized heating systems, nuclear is great at doing that. And the other area we're starting to see, new area, marine shipping. The motor for a marine ship, the nuclear reactor is the size of a baseball. That's all you have. That is your core, and that will drive a tanker twice the speed of a current bulk oil shipping thing. So there's so many other places nuclear is going yet, and all we're thinking about here is how many nuclear reactors will produce electrical energy to feed our houses.
Yeah, I appreciate that perspective. Okay, and Fabi, same question to you.
I'm definitely bullish, but to be completely honest, 10 years, I am bullish all metals, all commodities. I think we've underinvested in commodities in general for far too long, and there are more and more people in the world who need stuff, just like Rick said, and we need more electricity. It's not just about the people, it's about our everyday standard of living, everything that we're doing nowadays. Even EVs, I know it's sort of controversial because there are a lot of believers in EVs and a lot of people who don't believe that obviously we can't reach the targets that were set by governments, because I don't think they did the math of what we need to pull out of the ground in order to have 100% cars on the road being EVs in 20 whatever. But at the same time, nothing says that that trend is not going to grow, and we need absolutely everything for that. Energy included, uranium included.
Okay, that might sound like a redundant question to ask the uranium panel, and 10 years might seem like an obscenely long time, but it isn't, and I wanted to use that time frame because so much of the content that we've delivered at this show has been focused on communicating that the commodities industry is a long, slow game, and if you're patient, you can really prosper. But it's a volatile industry, and even in a long-term commodity supercycle, there are massive corrections that will shake most people out. So that's why I use the decade-long time horizon. So my next question spun out of that is, how do you go about constructing a portfolio? Where do you begin? You want to dip your toe in the water, start to understand price action, start to understand the supply and demand economics. You can listen to panels like this all day long, but to really figure it out, you have to put some skin in the game. And so where do you start? And Fabi, I'll begin with you this time.
So where I start is not where most people should start, because if they're new to this, then maybe they should play it safe. If you believe that the story around uranium is strong and the supply and demand imbalances, by the way, you can check these numbers in, for example, the World Nuclear Association, and places that are not about the investment thesis, but that will give you the numbers behind the story, so you can make up your mind as to whether you believe the investment as a thesis or not. And having done that, if you believe the commodity price is going to go up, there's no reason to not buy it, which is a pitch that Rick Roll can give you. But basically, you can buy the Sprott Physical Uranium Trust, and you have very little risk. Obviously, it's risky because you're buying a commodity, so it can go up and it can go down, but you don't have the risk of getting a mine into production. You don't have the risk of actually finding the mineral in the ground. And that's a nice beginner way to do it. Buying an ETF might not be a bad idea. The way that I like to play it is I like to go for the really, really tiny companies. So I like the companies that nobody has heard of yet, but that have something interesting in the ground, or there could be something interesting in the ground, and there's such small market caps that when people find out about them, then they really explode.
All right, I appreciate that. Thank you, Fabi. Daniel.
Rick alluded earlier that he's a beneficiary of this industry. He made his money betting on a development company that became a producer. And that's where you get massive re-rate coming through. That's obviously us. At the same time, if you looked at the 2011 cycle, and again, Rick, I'm sure, made his money there on the takeouts. Most of those takeouts were African takeouts. Why? Because the Chinese and the Russians could pin down material and own it 100%. So, yes, there are other alternatives, the explorers, etc. I'm going to let these gentlemen talk to those. But, for calling my own book, it's the developers and the takeouts are part of this story as well in any cycle with uranium.
Now spend a minute on that, Daniel. You're here, you're the company builder. What is the investment opportunity behind GoviX Uranium?
Yeah, GoviX is exactly that. I mean, our job is to raise the funds at the moment and take a massively undervalued project. The market, I think, really doesn't appreciate that we have two incredible projects. In fact, our second project in Matanga is actually better than our first project in Madahuela. And to turn that around in a jurisdiction that's been mining uranium since 1971 is well understood for a government where the last president actually worked underground in the uranium mine. So they fully get it. And a jurisdiction that's supported by the US and Europe very strongly as well, and want development to go forward. For us, to be able to put a mine permitted in 4 months, to be able to get a mine into production by 2026, that's high speed of where we are now. There are very few companies that can achieve that. And then to have a second project that's sitting right behind it that's as good. And these are long life projects. There are a lot of companies with one project short life. 20 years is our first project. Second one's 11, and both of them have got a lot of upside potential. So there's very few companies in the position we are.
Appreciate that. All right, Nick, same question. Portfolio construction in the uranium space. Do you think about it like the gold sector as well? Do you structure similar? Walk us through that.
I do. I structure all my portfolios similarly across commodities or currencies, if gold has to be a currency. I start with a core position in the commodity itself and in the large companies that produce it. So that would be an ETF that I keep as a core position. There's a couple ETFs out there. Rick will obviously pitch you the URNM, which I'm a fan of as well, over the UR8 ETF, because the UR8 ETF holds some, international conglomerate construction companies that aren't necessarily pure plays on uranium. And correct me if I'm wrong, Rick, but I think the Sprott ETF also owns a little piece of the trust, so you get a physical exposure as well through URNM, and then from there. And that might be, a percentage of my portfolio. Just make up a number, 5 or 10%, and then I take smaller positions on a percent basis in larger liquid companies, right? UECs of the world, the Energy Fuels, the Denisons, for example, Encore, which I came to be a shareholder of through a acquisition of another company I owned, and I'll trade around those positions, or I'll outright sell them if needed. Like we took profits last year on Denison, for example, as sentiment started to wane, and you could see that happening in the back half of the year. And then even smaller positions than that are the speculations I make on the early stage developers, the prospect generators, and the explore codes. And I tend to do that, as I explained in the other panel, through private placements, because they give you advantages in a risky sector in so much as you might be able to get shares priced at a discount to what they're trading at in the market, and you might get the optionality that a warrant affords you, so you can recoup some of your initial capital while you're waiting, which tends to be a thing in the uranium space. And so that's how I go about constructing my exposure to uranium.
Yeah, appreciate that, Nick. And Rick, over to you.
Yeah, do as I say, not as I did. That last uranium bull market, I was way early. I don't mean a little early. I mean, I was in 1998 and the uranium moved in 2002. You could say if you're 4 years early at an 8% discount, you're not early, you're wrong. And I had that feeling occasionally, but uranium when it moves, at least that time, gave me so much rent that it overcame the time value of money. This is a long way of saying that entry really depends on who you are, how much risk you're willing to take, how much volatility you can stand, what your cost of funds are, and how hard you're willing to work. I would suggest that people who don't have a position in uranium, talking my book greatly, consider buying the trust. You know, if you think uranium's going up, the first thing you do is buy uranium. Don't take any single company risk. The second thing you do is probably try to buy a little bit of the market beta by buying the ETF. What I've learned about speculative markets and commodity price markets is once every 5 or 6 years, they give you a tremendous buying opportunity. I don't know when that's going to occur, but I think it's going to occur. But there's also volatility in these markets. It would take nothing to take the uranium sector down by 25 or 30%. It would take nothing to take the junior resource sector down by 25 or 30%. And when you looked at your own portfolio sometime in 2022 or 2023, 2024, say, God damn it, I resent ever buying a resource stock. That's the time to enter. That's when everybody else feels bad about things. So establish a beta position, a position that moves with the market, and then add to the position during moments of panic and illiquidity. It's easy to say, when I was a youngster, it was hard to do, but I'm not a youngster anymore. I'm sort of a connoisseur of panic.
I like that, and it's hard to do. You're absolutely right. Making the contrarian bet, you know, we all say buy low, sell high. Well, what does that really mean? It means doing the thing that everybody's telling you not to do, right? Do the thing that no one else is doing. That's why it's low. Harder to do in reality. Look, I really appreciate it. I think that's a great place to finish this up. I feel like if we've had a theme at this conference that wasn't build a moat before you build a castle, it's temper your enthusiasm, which I would recommend as well, all right? Thank you so much for attending this feature. Thank you so much to my panelists. Let's give them a round of applause.
This is Jay Martin.